All right, let's go over Tuesday's session real quick, and then we'll jump into what we're looking at into tomorrow. So, taking a quick step back on, on this chart and reviewing what we already know, something that we went over in detail yesterday, okay, is the market opened on Sunday afternoon below 66.90, which was the most recent short pivot that was triggered onto the downside. To set up a test at the buy zone, long entries came at 66.61, picked up demand, put the market back over 66.90. Longs worked above 66.90 as well, and this pushed us up near the upper target at 67.87 on Monday's session. So the outlook onto Tuesday's session was very simple and very straightforward. Okay, we had the market close, okay, with the high being at 67.84, and we had the short pivot at 67.34, which was our first trap level. All right, and what we had set down in yesterday's newsletter was, can bulls sustain the overnight strength that we saw come in on Sunday? Can bulls maintain that to attempt a push higher? Okay, that was our outlook, and a good sign to see that bulls were able to maintain or sustain the strength that we saw on Sunday overnight was maintaining inside of this gray box. Okay, once again, the big level was set at 67.87, slightly above Monday's high, and the lower pivot at 67.34. Okay, so the overhead pivot was very straightforward. To trigger a run, the market needed to get above 67.87, and this would only set up the market to test a bigger breakdown area. I'll get more into it right now because this is something very important to know heading into tomorrow's session. All right, but what was more of interest to myself, okay, something I really emphasized on, was 67.34, the lower end of this range. Now, I specialize on traps. Okay, that means failed breakdowns. They happen way more times than the actual breakdown itself. Okay, we can be bouncing off a level. Okay, for example, the market can bounce off that level 10 times. If you're trying to short that level 10 times, I don't know how you're going to break even on that. Okay, because the markets, if we're bouncing off that level, 10 times, the market will trap traders there that are attempting to short it. Then we see the level actually break down on the 11th try. Okay, so shorting or attempting to short, looking for breakdown trades, it's not very profitable. Okay, or jumping in with a short position and holding it and hoping that the market can break down within the next few sessions, that's tough too, because you're relying on hope. You're relying on you hope it's going to break down. I don't trade like that. Okay, it's much easier to look for failed breakdowns. So much more easier, guys. I mean, Sunday, We had one at 66.61. That was the first one that fired off. We had one at 66.90. Okay. And on heading into Tuesday's session, our focus was set at 67.34. Okay. For the markets, if you're a seller, to trigger any weakness, we needed to see the market break down 67.34. And this would break the market down and out of this range. And what that would tell us is that bulls failed to maintain Sunday's overnight strength. That's what it would show us. Okay. So what did the market do? The markets, after being rejected near the bigger breakout level, 67.87, it chopped its way down to 67.34. Okay, and overnight session heading into Tuesday, sellers impulsively, look at this bar, sellers impulsively broke down. And what this candle shows, a lot of people, majority of people are going to look at it and it's going to spark some type of emotion. It can be, it's a few basic emotions, but it can spark fear, fear that, the market's breaking down this range. I got to get in on this now. Okay. Now you're reacting on impulsive behaviors. Okay. You got to learn how to calm your nervous system down. Don't let the market, don't let the market boom make an impulsive move, and now you're emotionally invested to it. You're emotionally reacting. You're gonna get crushed. It's not the way to do those things. Sellers triggered impulsively, and as I said in last night's newsletter, I'll pull it up, is always let sellers make the first move. Okay. Always let sellers make the first move. Okay, right here. In order for sellers to trigger any potential market weakness, sellers need to break down, keyword, break down 67.34 to set off any downside. This is where I'm interested to re-engage via a trap. This means that if the market sets up to test 67.34, be patient and allow sellers to make the first move, testing into 67.34, and sellers attempt a breakdown at this level, dipping under, and market quickly reclaims back over. Long entries can be considered. This is a breakdown. This is a failed breakdown. This is a trap. Okay, so sellers broke that down, failed to maintain the market underneath, and buyers stepped in and pushed the market back inside of the range. So, number one, that tells me and that signals to me that sellers failed to break the market down, and this is a potential sign that buyers are looking to sustain Sunday's overnight strength. Okay, and this was the best long entry, getting back over 67.34. Longs worked perfectly, and this set up a move straight up into the bigger breakout level of 67.87. Another 50 plus point trade. Just being spoiled these first two sessions of the week. Okay, and market even broke above 67.87. But if you were prepared and you listened and you reviewed yesterday's markets review and the basic outlook that we were looking at into Tuesday, you knew that price has memory at significant areas. You knew that this upper part up here is an area where the market had a significant reaction, specifically to the downside. Right here, we're looking at one, and over here last week. Okay, Knowing those two things, as the market's moving up, let's say you missed this move, as the market's moving up and nearing this area, you know that sellers are in this area. This area right here belongs to sellers. So if you missed this move, at least hopefully you had some risk management into play, saying, hey, market's breaking out, but I do know where the market's heading, and it's heading to an area that belongs to sellers, that sellers have repeatedly stepped in. You know what? I'm going to sit down for this one because it's higher risk now to look for a long trade up here. Because if it doesn't work, just like how we've seen in the past, is any rallies into the zone can get smacked down. So I'm going to keep my risk management in place. So that's what we saw. The market broke above, attempted to trigger a bigger breakout. We neared 68.15. Without a surprise, the market was rejected and sank the market right back down and inside of this range that was of focus into Tuesday. So in today's newsletter, what I'm going to be going into for Wednesday's session, our first trap level is going to be 67.64. Okay, if we came up, sellers rejected the market here and put it back inside of this range. If sellers want any potential downside, they need to break down 67.64 right here. Breaking down under 67.64 signals market weakness. Okay, and we'll be looking for these downside targets, eventually putting us back into 67.15. Now, I don't chase these breakdown trades, just as I mentioned earlier. I thrive on executing traps. Okay, unfortunately, most of the time the participants who are getting trapped are how do I say it? They are trading emotionally. You don't want to do that. Now, we're not robots, okay? I'm not a robot. I have emotions too, but we got to learn how to regulate it. There's so many ways to regulate emotion. Keep your nervous system cool, okay? But that's a whole nother topic. I'm trying to keep this video short, okay? But 67.64 is going to be my first level on watch for traps. If the market breaks down and buyers can reclaim back over, that is a long entry I'm going to be watching. Now, if we break down under 67.64 and we can't reclaim back over, just like right here or like over here, okay, if we come back up, like right here, we get rejected and we can't close above, I'm going to be patient on the long side. Okay, the next level of interest and the lowest bulls want to go, and a higher level of conviction is going to be 67.15. Okay, so keep 67.64 on watch. Under that, we have 67.15. Okay, for us to look for traps. Okay, so if sellers step in, that's great. We want to see their strength. Okay, very aggressive here. Within minutes, we dropped 200 points. Over here, we saw sellers step in. Okay, but it was, break down, sell, chop, 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 buy, then sell, and aggressive, then chop, 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 sell, buy, sell, chop, 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 break down, sell. So We're watching the strength from sellers in this area. Okay, we know this area belongs to sellers. We know that. What we want to be gauging in real time is the strength. Okay, so this was aggressive gap down and straight impulsive move down. Yeah, we sold over here, but over here we cleared 200 points within minutes. Okay, over here we dropped 200 points, but it was within 2 to 3 sessions, and it was very choppy sell. Okay, if I'm a seller, I'm questioning this. This is not what you want to see if you're a seller. Okay, so getting back over here, we did get rejected. We sank back in. So if sellers can break us down under 67.64, this is a nice level that I'm watching. 67.15. Okay, we're building higher lows. Okay, this would be a higher low up here. But we want to gauge the seller strength if sellers do step in. But keep 67.15 on a sticky note, 67.64, and I will get into it in this newsletter.